In this episode of Smart Humans, we talk with Slava Rubin. That's right, upon popular request, we're turning the microphone around and making the interviewer answer the interview questions. Slava founded Indiegogo, the original crowdfunding company. He's a general partner at Humbition, a seed stage venture fund, and he's a founder here at Vincent. He's also the regular host of this podcast. We'll talk about Slava's inspiration to get involved with alternative assets, what drives his startup investing and founding, how he stays informed, how he stays productive and fit, and his views on today's markets. It's a high-energy conversation with Slava, so stick around.
Welcome to Smart Humans with Slava Rubin, presented by Vincent. In this alt investing podcast, Slava talks to amazing minds about their investment journey and finds out what it takes to make it in the markets. And now, here's your host and smart human, Slava Rubin.
Welcome to another episode of Smart Humans. I'm guest host today, Eric Cantor, and my guest here is Slava Rubin. Welcome, Slava.
Well, thanks for having me. Excited to be on the show.
We're turning the mic around, and I've been looking forward to this for a while. So let's start with alternative investments. This is an alt investing podcast. How did you get into alternative investments?
Yeah, so it actually all started when I was a kid. I opened up a pack of 89 hoops, which is a basketball card box, and I opened up a rookie card for David Robinson from the San Antonio Spurs. That actually was the most valuable card in that entire set, and it was one of the first packs I ever bought in my entire life. So I think I bought it for about $1 and right away got this like $30 card immediately. And I was absolutely hooked. You know, I used to look at the paper and see these stock prices when I was younger and wish that I could invest in these different companies, but I was too young. So for me, being able to buy and sell trading cards was my way of getting into alternative investments. And then from there, you know, I guess it's a long story, but I become an entrepreneur, invest in different things, and really get excited by all these alternative assets.
So David Robinson got you into alts, huh? I'll try not to be too upset about that, because if I remember, David Robinson beat my Knicks when I was a kid in a pretty rough final series. But we go on. So private markets, alternative assets. What excites you about the aspect of not being public? Well, why are you bullish on these asset classes in particular?
I mean, public markets have a lot of value to them. Being able to invest in the New York Stock Exchange or the NASDAQ, obviously there's liquidity, massive volume. There's a lot of transparency. There's some incredible companies there, also some more volatile companies. I think there's a lot of great value to investing into public markets, but they're also massively efficient. And what I mean by that is there's so much money chasing after the returns, huge hedge funds, people with tons of money. This is what they do for a day job. It's very difficult to find any alpha or find any differentiation of something you might know that they don't. And I find in the private markets across these alternative assets, it's a little bit more opaque, less information, less money chasing after all these opportunities. And yes, you might lose your money, but I think there's more opportunity to have upside. So it's a little bit more exciting to be able to use the knowledge you have, the people you know, to try to invest into these things.
Got it. So let's get personal. How do you do that for yourself? How does your personal asset allocation reflect, you know, privates and publics and all that stuff?
As much as I love alternative investments, I don't think people should model after my approach. I am heavy into alternative assets. I skew very high percentage wise into the portfolio, into alternatives. Mm-hmm. If you include, for example, my personal equity into my various startups, you know, it's really a majority alternative assets, which for most people would be shocking. The numbers are probably way too high for any financial planner to endorse. But yeah, I'm a fan of all the various asset classes. That said, I'm not as good personally of being a yield investor, specifically private credit or real estate. While there's a lot of value there, I really prefer more the higher alpha, multiplying the potential returns. You know, you put in 1x, you potentially lose 1x, or if you get gains, it could potentially be a 10x, 50x, or 100x. So I really skew with my private investments into private companies, early stage venture. I also like crypto, and I like collectibles. Art is something I appreciate, but not really something I'm able to be such a good investor into.
I mean, I guess as the spokesperson for alternative assets, you would probably want to be pretty nicely allocated into alternative assets. Can you give us a little more breakdown on the math on the big asset classes in your own investing there in terms of crypto, pre-IPO, venture? I think you mentioned collectibles. Like, I mean, are those 5% of your net worth, 50?
Um, in aggregate, they are easily over 50%. They're probably closer to, I don't know, two-thirds of my net worth, and a lot of that is going to be in private company investments as well as my fund. So these days, I'm running a venture fund called Humbition, where we invest into early stage companies. So between the fund and my early stage investments, as well as my own companies, there's definitely a majority of it is in that equity. I'm definitely investing into crypto. I love BTC specifically, but also the L1s. I'm a fan of trying to diversify into the L1s, so the Ethereums, the Solanas, etc. And it's good to be diversified there because I think they keep on evolving, but the idea of needing more compute will continue to evolve. And yeah, I do have some nice chunky collectibles investments as well. But yeah, I would say overall, I'm overcommitted into alts. But as you say, as a spokesperson for alts, I probably am dog fooding quite well.
What's your favorite collectible that you have?
So when I was a kid, I used to think that the contemporary stuff was garbage. And this is going back to the 80s and 90s because there was too much volume of it. So I used to like trade. Here's a nick for you. I used to trade Larry Johnson rookie cards in bulk to try to make money on the spread. And then the profits that I would make, I would invest into like an Oscar Robertson rookie card or a Mickey Mantle rookie card, things like that. So even back then, I was trying to keep my money for the old school stuff, for the long-term investments, the buy and hold. I like to hold in decades as opposed to days or weeks. But yeah, the Larry Johnsons, that was definitely not decades. I was trying to just trade arbitrage and, some knowledge there.
You got any mantles still? That's a good
Uh,
one.
I do. I do. None of the incredible mantles, but yeah, definitely a fan.
Let's put a pin in that. I want to come back to your startup investing and all that later. But let's jump into just macro. Where do you see the economy, the market, the labor market? We're about to have an election. What's your kind of Slava Rubin analysis of today's market?
I think the market's doing quite well. The Fed has done a surprisingly good job of getting us to a soft landing, or some people are using the phrase no landing. I think jobs are holding up while inflation has come down significantly. So it's almost like Goldilocks. I do think there's turbulence because of the election, but that's very normal every 4 years. Personally, I think that 25 could be a good year from an economy perspective. I think a lot of that has been pulled forward in the stock market. So 24 returns have been massive, obviously led by a lot of the bigger cap names. Will the actual stock returns in public markets for 25 be as strong? I'm not as bullish on that, but I think the economy will be strong. So long term, I think it's going to be a very constructive investment environment. And I do think IPOs have the potential to open up in 25. Net, I'm optimistic.
How do you reconcile the stock market where it is today with consumer sentiment?
The interest rates are coming down, starting to come down recently. Really, there was the signal that was going to happen in late 23 in December, and already we're starting to see that pull forward. The prediction is that we'll see another 200 basis points of drop on the Fed funds rate in 25. So I think a lot of that, again, is getting pulled forward. You're also seeing AI proliferate into the mega cap names where, sales are going up, but more importantly, potentially costs are coming down on some expense side. So again, I think we're seeing some huge returns in the public markets, but maybe not everybody day to day is seeing this as part of buying milk or bread with their inflation prices. So not all consumers are as happy as the stock market is showing, but I think in general it's pretty good. Jobs are pretty tight, like I mentioned, and inflation is coming down. So I don't think sentiment is that bad, and I think it's pretty decent right now.
How much of your time do you spend thinking about this macro level stuff, the economy, the market, where things are going versus just doing the day to day work?
I keep track of the macro for the sake of being able to run the podcast and have good conversations.
Oh, you
And
run a podcast?
yeah, you might have heard of it. So, but yeah, I don't trade. So there's no macro event unless, it's a black swan type thing. There's no macro event that I'm just, trading week by week against. I'm really more buy and hold, like I mentioned, for a decade at a time. But it is very important to know what's going on. And in case there is black swans or things that you need to make a move on, i.e., when COVID first started, et cetera, it's important to keep an eye on all that. And it also is just helps to be informed.
Makes sense. So, what do you do every day then? Let's talk about you.
I mean, my day job is I run a fund, which is Humbition, and I'm exec chairman with some businesses, specifically, obviously, Vincent here, where we do these Smart Humans podcast, where we're getting access to all of the people out there to alternative investments and getting them educated with what's available. So, that's my main thing was working with startups and investing into startups.
Can you talk a little more about the fund? I mean, just in terms of fund size, how many funds are you on, what the geographic sector focus, thesis, et cetera?
Yeah, so it's called Humbition, which stands for Humble and Ambition put together. So far, we have one fund, and it was a $28 million fund. We're looking to close our second soon, which we're excited about. But we focus on deep tech, so hardcore technology companies, robotics, AI, Web3. We also love health tech. My partner is Cyrus Masumi, who builds ZocDoc, so we have great access there as well. We invest very early stage, pre-seed and seed. We love being there right at inception or at a very young stage for the company. And we try to mentor and help as much as possible to our entrepreneurs. Our belief is that any one entrepreneur has an opportunity to change the world. So, we try to stack the odds and help as many entrepreneurs as possible. Cyrus and I actually started angel investing in parallel, but separately about 13 years ago. And we've had some really great results with that early vintage with over 15x. So we've really been leaning into that as a focus.
And when you're looking at these startups, there's lots of companies, right? Deep tech, AI, there's a million companies. So what are you singularly looking for if you're investing in a stage where there's really not going to be a lot of product revenue? What do you look for in these companies you invest in?
I mean, usually when we get involved, there's no product, there's no revenue. Sometimes there could be some early product and maybe there's early revenue, but usually neither exists at all. It's more just a twinkle in their eye. And for us, it's really three things, which is one, team. We're all about the jockeys, finding the right entrepreneurs to back. Number two, dream. Are you going after a big opportunity and do you have an idea of what the right, better mousetrap or the better product is to go after that market? And number three is access, which is why is it that we're seeing this deal? Why is it that we're getting this opportunity? Does it feel like we're the 15th, organization looking at it and just getting to turn it down again or say yes? Or do we have some unique access to this opportunity that makes it differentiated? So again, this goes back to that point about the public markets. It's really hard to have differentiated access to a public market investment. I mean, sometimes I would even call it insider access. But in a private investment, you want to have some of that insider access where you feel like you have proprietary information that no one else knows that you can move on before others. So that's kind of the recipe is those three things that we're looking for.
So tell me about the Slava Rubin production function. How do you, a lot of people want to emulate some of the things you've accomplished. What does your day look like? Tell me when you wake up, how do you energize? Do you eat any food? What's your routine if you have one?
Let's see, my routine. I wake up usually between 6 and 7, not because I wish I was waking up then, but my body's been trained to wake up then because my kids, I have a 9, 6, and 2-year-old. I do not eat until later in the day. I'm an intermittent faster. This is not something that's been trendy for me more recently. I've actually been doing it for well over 20 years. When I was younger, I just figured out that food does not jive with me and my brain being optimized. So I try to keep all the brain cells, activated as much as possible until later in the day. I usually eat between like 3 and 8. I just try to process as much information as possible whether it's going through emails, talking to lots of people in person, obviously reading what's happening on in the world through Google, through Twitter, X, etc., through my various news outlets, channels, newsletters, and I do actually like to also listen to on CNBC. There's a show called the Fast Money Show. There's one later in the day at 5, but there's one Fast Money halftime show. I like the halftime show a little bit better. I don't listen to it real time typically. I'm usually just listening to a recording of it. And it's a great way to just very quickly get a synopsis of what's going on in the world through a lens of the market, and also just these various folks giving their opinions about that. But yeah, I like to, be home for dinner if possible, and try to be there with my kids. But otherwise, just getting to talk with LPs, talk with entrepreneurs, and just, learning a lot and getting a lot of information. I'm just always curious and trying to find new amazing things.
So what drives you? I mean, you a lot of people want to know, a lot of people are asking, what drove you to start Indiegogo and to create this private market company investing fund, is to start Vincent? You've got other companies too. Like, what is it that makes you get up and do this?
I love entrepreneurs. I do think there's a continuous thread through most of the things I've been doing, which is supporting, empowering, or working with entrepreneurs. Indiegogo did that. Helping to pass the Jobs Act did that. Angel investing did that. Humbition does that. And then when I get to work with other amazing operators, whether it's with Hedera or Nillion or Vincent, it's awesome to be able to use a little bit of my gray hairs, or white hairs, as they say, a little bit of my experience to leverage that with incredible teams. I love 0 to 1. I love knowing that there used to be air and then reality was changed. Too many people walk around, in my opinion, around the world thinking that everything's taken for granted. The fact that the lawnmower exists, the fact that the iPhone exists, the fact that the grass is the way it is, these things all happen because somebody decided to change that and have an impact. So I think today is a great opportunity to do that for tomorrow. So I love finding those 0 to 1 opportunities and working with other passionate people that want to navigate that. So that's what is the catalyst for me. And it has to be done with people that you want to work with. It has to be done on problems that you want to solve. So there's problems out there that others solve that, is not for me, and vice versa. So it's really about being passionate and excited about the dent in the world that you're trying to make, and knowing that it's going to take a long time to accomplish that, as opposed to just the idea of flipping a company or an investment in 2 years and trying to make a few $1,000,000, which is a good idea and totally worthy if that's what somebody's interested in, but it's not what drives me.
That was a great answer. Appreciate that. Just double click on one thing you said, just because I think our audience would find it interesting. You mentioned the Jobs Act. Can you just talk a little more about what that is, why it's important? Is it important? Did it work? What was your role in it? And just kind of tell the story of the Jobs Act in a brief.
Yeah, so we created Indiegogo actually in 2008. Originally came up with the idea in 2006. We actually right away, Indiegogo is a crowdfunding platform. We helped to create the crowdfunding industry, and specifically donations and reward-based crowdfunding. The idea of equity crowdfunding, which exists today, did not exist back then. And people would always ask, hey, I'd love to invest into these Indiegogo companies and into these Indiegogo campaigns. So finally, in 2011, there was actually a campaign on Indiegogo to raise money to petition Congress to be able to pass equity crowdfunding, which is quite a meta concept. And that was funded. There was a petition. And in 2012, the Jobs Act was signed. Obviously, it wasn't just because of the Indiegogo campaign, but there was momentum to try to stimulate more entrepreneurship and increase money flows after the recession of 2008, which really contracted risk appetite and willingness to share investment capital across different asset classes. So the Jobs Act was signed. It was meant to do a few things, including create more of a IPO ramp between Reg A Plus and being able to not have to disclose all your information for IPOs, et cetera. But also one of the things was it passed equity crowdfunding, which allowed for small investments from unaccredited investors to go into these smaller companies. And it was a $1 million cap back then. It's been expanded to a $5 million cap. There's definitely been some exciting momentum that's happened there to be able to have the retail investor, the non-accredited, to be able to invest in these opportunities. It's still been very small compared to the massive opportunities of the New York Stock Exchange, NASDAQ, et cetera. but I do think there's momentum there, and I'm excited as to where it's headed. I do think investing should be massively democratized. It shouldn't just be for the rich. You shouldn't have to be accredited. You don't need a driver's license to go to Vegas and gamble. You shouldn't have to, have to pass some certain thresholds to be able to invest in the companies you want to. So I think that there's still a lot of work to be done to improve it and to get more scale. But if you close your eyes, take a nap for 20 years, I think it'll be very, very exciting as to where retail investing is at in 2045.
You mentioned fast money. What else, if I want to learn and know what you know and learn what you learn, what else should I be reading, listening to, watching?
I'm horrible at reading. I mean, I'm capable of reading. I like newsletters, and then also just reading Twitter X, just for a lot of information and trying to triangulate all that information. But actual books, I would say that I haven't read that many more recently. One that I would promote, that I suggest, is called Outlive, which kind of speaks to how to live have a better life, a healthier life for longer, as opposed to just how to age well. It's from an author, Dr. Atia, who's become pretty popular more recently. So I read that recently. I suggest that for anybody that wants to try to live better. But outside of that, it's just triangulating a lot of information, and really just trying to stay connected to a lot of awesome people. So whether it's in person or virtually, staying connected, having chats to just really smart, curious people and trying to learn from them. And often you'll learn more by listening than by talking, which is why I love the podcast. I get to learn so much from all the guests, and trying just to, one of my favorite things is being introduced to somebody they recommend that I should be introduced to. So that's a way to expand my circles and to, dive into newer territory, to learn new things, which is always where, I guess, the new things happen for me.
Thanks. So looking ahead, let's talk about investments. I'm going to ask you to give me two investments. Let's start with a public company. Investment you believe that in, 2 or 3 years will be one that you're happy you made today.
So I don't typically think in 2 to 3 years. That's not really my mental model. I really more think in, like I said, a decade plus. That said, I think it's all a sequence. You go to 3 years first, and then it becomes a decade. So directionally, it's still the same response, but it's hard to time the market sometimes, knowing what's going to happen as it relates to the macro or any idiosyncratic things related to the company. So I'll give you two ideas that probably both are not the most regularly thought of. So obviously it's easy to pick, let's call it one of the mega cap names, whether it's Microsoft, Amazon, etc. But I'll give the listeners two maybe that they don't think of as often. So one would be CrowdStrike. So CrowdStrike, right now is closer to like a $75 billion market cap company. I've been investing in them for a little while. I'm underwriting it for being a potential $1 trillion opportunity. I think from a secular perspective, cybersecurity is a massive opportunity. CrowdStrike is one of the bigger names in that market. I do think that as AI only becomes better, cybersecurity and the potential for hacks will only become a bigger issue, and more money will need to go against defending our assets. So I do think that the market will continue to grow, and I do think there's an opportunity for there to be a $1 trillion player there alongside the other mega cap names. So I would say in the public markets, it's CrowdStrike for me. And they were that organization that just a few months ago had a significant hiccup where there was that supposed hack, but then it was really just bad deployment, et cetera, et cetera. I actually think that was a massive opportunity to buy at a discount. It actually went down to as high 100s, low 200s, which clearly today pricing more around 300 shows as a significant opportunity. So I would say a few years from now, I'm still quite bullish as to where that company's headed. Another one that probably most have not even heard of, which actually I'm involved with, is a company called Watsco, which is an HVAC distribution company. So heating, ventilation, and air conditioning. You can really think about it as air conditioners. They distribute, and their customer is the service provider, the person who goes out and helps to put in the air conditioner to your home or fix it. So this is a massive opportunity. And as people continue to want to electrify and lower their carbon footprint, many don't know that their HVAC systems are actually eating up a lot of their carbon footprint is right there in their home. And so they're doing a great job. Again, I'm connected for several years with the board. But I think, again, 3 years from now, I'm still quite bullish as to where that company's headed.
Great. Big market for HVAC, that's for sure, and growing. What about on the private side? Are there private investments you think are interesting, keeping in mind that, access isn't always as easy as going out and buying a public ticker?
Yeah, I think some of my private investment suggestions are going to be a little bit more boring. So I'm a huge fan of SpaceX as an investment opportunity. I think Elon, whatever you think of him as an individual, is an incredible entrepreneur. Space is literally the next frontier, and a lot of greenfield in terms of market opportunity. SpaceX is already doing billions of revenue, and there's just so many opportunities to monetize. So I'm a huge fan of that company. I've actually been personally invested for a while. I think, these days it's worth around $200 billion. I think, again, I think that's on a pretty aggressive path towards $1 trillion opportunity. So I'm very bullish if people can find SpaceX shares. I'm also a fan of Bitcoin. I think that crypto in general is, 98% schlock, and you need to avoid the schlock. But, in the 90s, that was true for most websites and web companies as well. But there was Amazon and other opportunities there. So I think BTC will be that 1%. It'll be able to survive and try to become like the digital gold, or at least the digital gold market cap. So, I'm bullish for 2 to 3 years out what Bitcoin could be priced at. I also think just getting a diversified basket of L1s could be smart as well. Ethereum, Solana, etc.
Awesome. So just tapping into your podcast experience here for a second. Last question I want to ask you is, if I was a better podcast guest host, what question should I have asked that I didn't ask you?
I think your questions were good. The only thing you could have done is, instead of staying on script, you could just dig in a little bit more into the actual responses and try to, scratch the itch.
Awesome. This has been an amazing, energizing conversation with Slava Rubin. We talked about your origins as a David Robinson collector. No offense taken. Your confidence in today's macro, the way that you invest in startups looking for jockeys and looking for differentiated access, the content sources you like, including Fast Money on CNBC and just having chats with smart people, your public investment recommendations, CrowdStrike, a little edgy, high-tech, sexy, Watsco, old, bland, and boring, good recos, and then, of course, SpaceX on the leading us into the next frontier of space, and the 98% of crypto being schlock, but the OG still being something you like with Bitcoin. And that is our wrap. We had a great conversation. Appreciate your time, and we'll see you next time on Smart Humans. Thank you, Slava Rubin.
Thank you.
Smart Humans with Slava Rubin is a podcast brought to you by the team at Vincent. Any data, text, or other content in this podcast is provided as general market information and not as investment advice. Past performance is not necessarily an indicator of future results. For more information on alternative investing, check out Vincent at www.withvincent.com.